BNSN Pathshala. And this is an attempt, of course, Kunal, to help our viewers better understand technicals. And you've identified a strategy that they can actually use on an ongoing basis that will help them trade better. What are you going to tell us and our viewers about today?
Absolutely, Alex. Thank you so much for that. So there are three questions which we always ask when we discuss any strategies. What is the strategy about? Why is the strategy or the parameters used? And how is the strategy useful? So we'll start off with the first part, which is what? The strategy includes a moving average crossover. Now, it's a very typical kind of a moving average crossover which you look out for. But the second most important is which are the parameters which we typically use. The parameters over here which I've used is a 5 exponential moving average and 13 exponential moving average. Why 5 and why 13? Because both of them are Fibonacci numbers and they have a lot of relevance in terms of market statistics as well as sentiments as well. So these are the two moving averages which we typically plot on every chart to try and determine the trend. So the last question, which is how do we interpret once we see a moving average crossover? As you can see on the charts, the blue line which you can see is a 5 moving average, exponential moving average, and the red line is a 13 exponential moving average. So we wait out for the points where the indices, so this is on the Nifty, we wait out for the points of crossover. So as you can see on the downside, that this is a bullish crossover where the 5 exponential moving average, that's the blue line, crosses above the red line. And when we see that happening, we expect that the trend of the indices or the asset class turns bullish. Now you look at the movement on the Nifty. This is just about the last month, from the month of March, that from these moving average crossovers, we've gone to a steady uptrend on the Nifty. Look at the bearish crossover which happened over here. This was start of 2012 in the Janu highs when no one was aware of what's happening geopolitically. That's the first time when the markets have given a sell signal. So as you can see, the blue line, the blue moving average managed to cross down the red moving average. That was the first trigger where the markets indicated that we are into a downtrend. More importantly, even in that correction mode, as you can see that there have been mild bounce backs in between, but the blue moving average did not cross above the red line. That's a very, very important observation. It tells you that even if there are pullbacks, those pullbacks are not being resulting into any kind of a change of trend. And look at what happened on the indices. From 18,200 levels, we gradually moved down lower and went to almost 15,600 mark. That's the very important aspect about this. Now, on the next slide, I'll give you a slightly broader term view of how these trend calculations actually work out. So in the next slide, we look at from those pandemic lows, where the first time when the blue moving average, that's the bullish crossover which happened over here on the Nifty, first time when we saw those signal. After that, the trend lasted for almost 3 months. And look at the jump on Nifty. We were at 9,000 levels when the first moving average crossover happened. At that point, and then the index moved up towards 11,000, 11,500 in a matter of 3 to 4 months. So that's the impact of this moving average strategy. It's a very important, very easy to plot on the charts, and something which I believe every trader can use it for his daily trading as well.